Good morning. I'm Henry Curr. I'm the economics editor at The Economist. I hope everyone enjoyed the last session with my colleague Rachna Shambhog and the former Treasury Secretary Jack Lew. I'm delighted to be hosting this next panel at the Greenwich Economic Forum, looking at the post-election economy and its implications for financial markets and global trade. It's really been an extraordinary year for the economy and an extraordinary few days of economic news. The depth of the downturn brought on by the pandemic is unmatched in post-war history. We've seen economic policy innovation and stimulus on a commensurate scale. Based on the recent data in the US, that seems to have brought about a quicker rebound, at least in the unemployment rate, than many people expected. And it's against that backdrop that we must assess the news not only of Joe Biden's presidential victory in the election, but also the announcement this morning of Pfizer's vaccine trial, or the preliminary results from that trial, showing 90% efficacy. And I'm sure our panelists will have lots to say about the implications of that. So let me introduce them. We have Jay Bryson, who is the chief economist of Wells Fargo and a former economist at the Federal Reserve. We have Mann, who is the global chief economist at Citi and former chief economist at the OECD. And we have Mick Mulvaney, the United States Special Envoy to Ireland and former acting White House Chief of Staff to President Donald Trump and Director of the Office of Management and Budget. I've got a few housekeeping points for you before we get started. If you are having any trouble accessing our content today, please make sure you are using Google Chrome, which is our recommended browser. We will be taking questions, so please use the Q&A function to ask. And I'll do my best to share those questions with the panelists throughout this 45-minute panel. You can take advantage of our networking features by searching with and connecting with other attendees and sponsors during the networking breaks, and we will have a networking break immediately after this panel. So I'm going to start with Jay Bryson. Do you want to give an outline, Jay, of where you think the US economy stands right now and how much on recent news you're rushing to update your views on it?
Well, so, obviously the U.S. economy grew quite strongly in the third quarter. We bounced over 30% at an annualized rate. It looks like growth here in the fourth quarter, what we know right now, will be positive, although much slower than that, probably on the order of maybe 5% or so. I mean, in terms of what this vaccine means, we were talking about this before we came on, and I mean, it certainly is good news, if we can get this out deployed quickly, but I think that's the catch. And so what we kind of have right now is you have a race going on, right? You have COVID cases spiking. In the last month or so, the number of new cases have doubled. And on the other hand, you have this vaccine. And so, hopefully we can get through the next few months before we get to the point where, we start deploying this vaccine, pretty widespread. So I would say that the outlook is still, the near-term outlook at least, is still a little bit uncertain at this point. And we'll just have to see how these two things develop, the acceleration in COVID on the one hand, but on the other hand, the deployment of the vaccine.
Do you think it affects the policy trade-off when we're thinking about how much you should be trying to suppress the virus versus keeping the economy open? Do you think the now imminent, or at least the success of the vaccine in the trial, changes that calculation at all, and thereby affects the near-term outlook, or is it much the same?
Frankly, I think it is much the same, at least in terms of the near term. If we get to a point where hospitals are being overwhelmed, like they were in some of the cities earlier this year, if that's starts to be more and more widespread, and you don't have a vaccine out there deployed, you may have to put in a lot of restrictions. Now, we are under the view that we probably won't be going back to March and April. We don't think that the politics support that right now. We think that most governors are going to be under tremendous pressure from their constituents not to go into full lockdown mode. Now, that doesn't say you can't have localized sorts of restrictions in different municipalities and things of that nature. But to go back to where we were, I just don't think that's going to be happening anytime soon.
Let's bring in the other extraordinary piece of news from the last week, the election result, which is what this panel initially envisaged as focusing on. Mann, I know you have a global perspective at Citi. Do you want to talk about how important you see the Joe Biden's election victory as being for the global economic outlook?
Well, thanks very much for the opportunity to join this panel. There are a lot of moving parts these days with what's going on in the U.S. economy and the global economy. The bottom line that we came to when we were evaluating both a potential Trump presidency or a Biden presidency, when we looked at this back in September, was we came to the conclusion that a Biden presidency was far more beneficial, not just for the United States, but for the global economy. And the directions that we saw for this was, of course, the degree to which there was going to be multilateralism approach, both in terms of two key areas, climate change and trade. So the Biden presidency have a much more multilateral and alliance approach to the climate agenda, returning to the Paris Agreement. We also saw this as being beneficial for not just the climate outcome, but also for the United States, because it means that there is an alliance, a sort of a strategy where U.S. exporters can compete for global markets for green technologies. Under a Trump presidency, that would not have been the case because there would have been a very different domestic strategy versus the strategies being taken by foreign economies and foreign policymakers. So this argument that U.S. producers and U.S. exporters will now be able to compete for a global marketplace for green technology products and services. This is very important, and we think it's a win-win, of course, for the U.S. economy and also the climate. But it's also the case that for financial markets as well, the concern that there was going to be a limitation on the ability of U.S. Financial asset managers to be able to address the issues of investors for preference for an ESG allocation within their portfolio. There was a real concern that that was going to limit the ability of U.S. asset managers to be competitive in the global marketplace for asset allocation. So on those two dimensions, we think that the Biden presidency would be better for both U.S. asset managers, U.S. exporters, and for the global economy as well. Of course, the other dimension is just trade in general. And, again, there are many issues on the trade agenda that are not going to go away, issues with regard to the technology, concerns associated with China. And, the fact is that the U.S. will be able to address those more effectively in a multilateral forum, if through the WTO, or if not through the WTO, at least with a kind of a joint approach with Europe and Japan. And that's important for addressing these issues, which are very real with regard to technology, intellectual property, theft, cybersecurity, foreign technology, foreign ownership restrictions. But I think there are other dimensions on trade which will continue to be challenging. We do not see that there will be issues with regard to auto tariffs on European cars, for example, but there are issues with regard to data privacy that will continue to concern the trade negotiations between the U.S. and Europe. But we think that those trade discussions can be more fruitful to achieve some sort of understanding under a Biden approach to trade in alliance. So bottom line is a Biden presidency much better for the global economy and for the U.S. economy. These are two dimensions, climate and trade in general. We could certainly talk about other ones as well.
Well, it's interesting that you mentioned those sort of more fundamentals-based factors, because a lot of the commentary that I read in the US assessing the immediate prospects for the US economy after the election concerns itself primarily with the degree of fiscal stimulus. Do you have a degree on a view on the importance of the degree of stimulus versus those other more fundamental factors you just mentioned?
Well, I think the two of them actually are not different from one another. For example, a climate agenda is one that has a certain degree of fiscal activity associated with it. Now, when I talk about fiscal actions, I have three buckets. I have spending, I have taxes, and I have rules and regulations. And on all those three dimensions, you can have both a near-term stimulative effect, in other words, supporting aggregate demand, but also pursue an agenda that has more innovation and more infrastructure that would be supportive of potential output in the longer term. So when we talk about the fiscal program, what we think is important, the numbers obviously are important, but it also matters the kind of the nature, below the, underneath the hood. Is it more of a life preserver, which is what the stimulus, or it's not being stimulus, it's just been an offset to COVID so far. That's what we call it, a life preserver. At what point is there going to be a pivot in the fiscal activity from this life preserver to, quote, building the better boat? In other words, having a fiscal program where the choices, again, tax, spend, and rules and regulation, are supportive not just of aggregate demand in the short term, but of a more support to potential output in the longer term. Critically important when we think about debt sustainability.
Mick Mulvaney, I imagine you have a somewhat different take on the prospects for growth now that Joe Biden has won the election. What do you make of Catherine's view on that?
Well, I agree with a lot of it. Some of it I'd push back a little bit on, but I think a lot of it has to do with a couple of assumptions that we make. Obviously, I think it's an assumption here that Joe Biden wins the president sworn in January. I think it's less clear as to what the assumption is regarding control of the Senate. So let's assume, for the sake of this discussion, that Republicans do hold at least a small minority in the Senate. There's two races still outstanding in Georgia that look like they will go over until January. Traditionally, you would assume those would be safe Republican seats, but obviously not necessarily. Was the whole thing muted, or was it just the last couple of seconds? Now I can't hear anything. Henry, I can't hear you at all. Can somebody else say something and I could hear it?
I can hear you. I can hear you, but I missed part of your commentary, most of it actually.
All right. I'll give the short version. Let's assume a Biden presidency and a GOP in the Senate, then the issue becomes, in certain extent, what does the cabinet look like? Does the cabinet be a centrist cabinet? Is it a more left-leaning cabinet? And it's probably going to be obviously a combination of the two. Which positions go which way? My guess, it's an educated guess, but it's still a guess, that Liz Warren is probably not going to be the Treasury Secretary. They just can't afford to have another Scott Brown incident up in Massachusetts, where they're very close to having control of the Senate and then lose control. But if they don't control the Senate, maybe she goes. But still, I think that Biden's Wall Street backers would cringe at seeing Elizabeth Warren at Treasury. So you might get a centrist there and a more left-leaning, say, at the Department of Labor and the Environmental Protection Agency. So while I agree with Catherine that a lot of the trade probably looks a little better, you're right. There's only a couple things that are still left to be bipartisan in Washington, D.C., and one of them is antipathy towards China right now. But certainly I think the concern about auto tariffs, steel tariffs, aluminum tariffs goes down in the near term. The stimulus, I think... Yeah, I think Mitch McConnell's going to want to wait a little bit to see. Jay had mentioned that he thought fourth quarter growth might be in the 5%. I'm assuming that's a quarterly number, not an annual number. And if that's a quarterly number, I think there's going to be pressure coming from the right wing in the Senate to wait before they do something massive. But again, the natural tendency in Washington, D.C. is to spend more, especially during a recession. But circle back to the first thing, I think the one thing we've overlooked, and maybe get a chance to talk about it before this is over, is the role of of the Biden administration on regulation. It is much easier to do than legislation, especially when the House and the Senate are split. Plus, it's easier to regulate than it is to deregulate. I've heard stories already that there are things that have been sort of building up in the pipeline at various agencies in anticipation of a Biden presidency, so that you could see a flood of new regulatory activity quicker than you might have seen the deregulatory action under the first couple of months of the Trump administration. So consider, yes, I'm not as sanguine about the outlook. Catherine correctly mentioned sort of the issues about the debt weighing on the larger economy. We could talk about that. So I think right now it's a mixed bag. And I've stopped talking. If anybody's Henry, I can't hear anything you're saying.
I can't hear Henry at all. I mean, I can hear Nick. Jay, do you want? I can hear Jay. So it's Henry that's muted at this point. So at least maybe the three of us can just proceed, right? Right. So, I mean, doing that, just going back and talking about the potential for the Republican Senate and a Biden presidency, I guess I'm going to go with that as being a possible outcome. That's kind of where we thought we were going to be. Frankly, it was our highest probability when we were looking at this in September. On the climate agenda, I think that there may be more room for progress because I think that there were prior to Trump's view on climate as not being a real issue, there are more Republicans who were working with the Democrats back in the period of the Paris Agreement. So that's something that I think we lost that view, that voice. The Republicans lost that voice during the last 3.5 years, and I think that there are people who would welcome the opportunity to move forward, even if they are on the Republican side. So I think that there's more potential momentum there than sort of you were suggesting. Now, on the regulatory front, I think it is true that deregulation is maybe easier than regulation, but some of the regulations that, especially on the climate front, unwound many years of companies achieving a regulatory to undertake investment in order to achieve a regulatory standard. I can think of particularly of the CAFE standards. And when there was a rollback of those standards, that was not good for the environment. It was also not good for companies because they effectively were zeroing out their capital investments from previous time periods, whether it was actual capital investment or whether it was an innovation capital investment. And so when I think about re-regulation, it's like, let's just put back into place the climate-oriented strategies, maybe extend them some, but climate-oriented strategies to which companies had already achieved an investment profile. And if we think about, again, the competing to win on the global stage, demand for greener investments. Everybody else out there is doing this. Think of the net zeros. It's not, it's rhetoric at this point, but it does imply some commitment on the part of those policymakers in other countries in order to achieve a more climate-oriented, a greener strategy. If you give companies a clear signal, whether it be a relative price signal or a regulatory signal, or two different ways to do that, companies will innovate to get to that price signal or regulatory signal. If other countries are doing it, other firms are getting a jump ahead of U.S. companies, and for that reason, I think that there's a realization that having a more robust climate agenda is beneficial and catalytic of private sector investment and private sector finance. And that's the point where we think about the benefits not only globally, but also for U.S. companies.
I've been told that you should be able to hear me now. Can you hear me now, Catherine?
Yes, yep. We can.
Well, I have a question for Mick. When I was in Washington, what people always said was that to leave a real mark on the regulatory agenda, you needed 2 terms. That what the Trump administration had succeeded in doing was in slowing the growth of regulation, but not yet in rolling it back, and that would require a second term. To what extent do you think the Trump administration will leave a regulatory legacy here, or will it snap back somewhat as a result of him being a one-term president?
I think the answer to that's fairly easy. It will snap back. It really does take time to kick in. I think Catherine may have misheard me as a result of my technology here. I contend it's much easier to regulate than it is to deregulate. it was hard for us to do it. There's muscles that the federal government doesn't use very often when it comes to deregulation, and it had actually been probably a generation since Reagan, since deregulation was sort of as a centerpiece of a Republican administration. There were, for example, a generation of folks working at agencies who'd never been asked really to deregulate in a meaningful, broad fashion. So it was slow to get started. There was some, your point is, I think, well made, Henry, about slowing the growth of regulation more than there were some significant rollbacks. That being said, I think it snaps back relatively quickly. I'll give you a specific example. Over at the CFPB, which I used to run, we had tried to slow some of the rules on short-term lending, what folks refer to as payday lending sometimes. And my guess is if Kathy Kraniger is replaced by a Biden appointee, that you would see a re-regulatory action in that specific space very, very quickly. Again, a small segment of the overall economy, but an example of some of the snapback that you will see. Much easier in a divided government for the administration to act in an executive fashion than it is in a legislative fashion. It's just not very satisfying to sit there and think I have to slug through 18 months negotiating with the House and the Senate, regardless of the party control. There's an institutional tension between the White House and the Capitol. And it's just easier to go off and do stuff by yourself. Obama did it. Trump did it. Both of them, I think, in very pen and a phone, and my guess is you'll see the same sort of dynamic kick in relatively quickly in a Biden administration.
Jay, I'd like to bring you in on this point. There's a lot of debate about the impact of the regulatory agenda on growth under President Trump. Typically on the right, people say unleashed business confidence. But then when you look at the actual estimates of the amount of regulatory cost averted, it tends to be very small as a percentage of GDP. Do you think that there was a supply side effect from President Trump's regulatory policy, and how much do you expect that to change now that the Democrats have the White House?
Yeah, so I think there was a positive effect on the margin, but I would stress on the margin here. So many other things going on; it's hard to really isolate, statistically what that sort of effect was. And I would think going forward as well, if we go back into more regulatory standards going forward, that maybe there's a small negative effect on the margin. Everything else could have taken by itself, but everything else is not always taken by itself. There's a lot of other things that are going to be going on here in the near term, whether it's with COVID, whether it's with fiscal stimulus, whether it's with global growth helping the United States. So it's really difficult to really try to isolate that out. So again, I think it's deregulation is probably beneficial, but it's on the margin.
We've had a question from the audience here. What would be a reasonable forecast for the US dollar with respect to other major currencies in the next year? I know a lot of people have been talking about this, certainly before the election. It shifted a little bit as a result of the election result. What do you think, Catherine?
Well, this is talk about a complex question. It really depends first on your time horizon. This question was about next year. I know there are a lot of people who aren't even thinking kind of like until this afternoon. So we have to layer on a couple of different things here. We have to layer on, I think, a very important question about the vaccine and who relatively more receives the benefit of it. Now, if it's deployed, is it better for Europe than it is for the U.S. because Europe is currently experiencing a more significant set of cases now than in the U.S. or is responding from an economic perspective, potentially having a much more weaker fourth quarter than was originally expected. But then we have to sort of say, okay, what are the underlying prospects? If we think that the U.S. economy is going to be relatively better off because it now has more certainty, it's going to have a bigger fiscal stimulus because it has some elements of infrastructure, climate infrastructure associated with it, then you're looking at an economy, a U.S. economy that's going to be relatively outperforming from a real economic perspective. And that would tend to promote capital inflows and attractive appreciation of the dollar, at least against other developed economy currencies. On terms of emerging markets, right now you can look at the technology-oriented emerging markets in Asia really benefiting from the strong rebound in China, particularly because it's ahead of the COVID waves and also has done a pretty good control of it. So you've got your Asian economies already doing well, and their currencies appreciating relative to the dollar. So you've already got this differences in action between the dollar versus DM, or developed country economies, and their currencies relative to, say, an Asian emerging market and China currencies. So the fact is, when we come right down to it, there isn't a dollar. It's always about dollar relative to another set of countries, currencies, or against individual countries. So you got a couple, lot of moving parts there, and so it's a tough question to answer.
Would you agree with that, Jay?
Well, yeah. In general, I think I certainly come down on the sidelines of, I think the U.S. dollar is probably going to depreciate versus emerging currencies. I mean, it seems like this is kind of what we're looking at right now. Assuming that this vaccine really becomes effective, we're looking at a risk-on sort of move again, and I think that really does help most emerging sort of currencies versus the dollar. It's a little bit of a mixed bag, what that means for the dollar versus like the euro, Canadian dollar, things of that nature. But I certainly would believe the U.S. dollar probably going to depreciate versus some of these emerging currencies.
One of the things people were speculating about in the run-up to the election was the extent to which a sense of chaos after the election might inhibit risk-taking. Clearly, we're not in that world now. There's a lot of positive sentiment, especially after the vaccine news. However, it's still the case that President Trump has not conceded. Now, Mick Mulvaney, I know you've just written an article saying you've been asked this 100 times in the last week, but I'm afraid I'm going to be the 101st person to ask you. Do you expect President Trump to participate in a peaceful transition of power?
Yeah, and it turns out the expectation of chaos was about as accurate as some of the polling. I to participate in a peaceful transfer or retention should something unusual happen between now and January 20th. But I do expect it to be a little bit choppy between now and then, possibly very choppy. The president doesn't countenance well to losing. Very few politicians do. And people forget, I think, that I think Gore took 30 or 40 days or something like that before he conceded the race. So I do think it's going to be messy for probably. But at the end of the day, as I try and figure out what happens next for the president, should he lose, whether it's a future race, whether it's a television operation, it's the math in my head is that he's better off under more circumstances by leaving gracefully than he is leaving under some type of cloud. Do I think he's going to actually show up at the inauguration? Probably not. But that doesn't mean he's going to be. It's going to be a chaotic sort of removal. That being said, regarding the lawsuits, look, and the president doesn't have a bigger cheerleader right now than me, but quickly approaching the time where they have to put up or shut up with their evidence. These allegations of fraud and voting and all that. Look, we get it. Every politician in this country has heard those types of anecdotes. We think we've seen evidence of it at a small scale. But if you're going to challenge the outcome of a presidential election, you have to have more than just allegations. You have to have facts. Not to say that that time has expired now, but it is quickly expiring for them. They've probably got a week or two before they can really before they've run out of time.
We're having a lot of interest in the questions on the issue of the trade war with China. We've already touched on it in several answers around the time I was having technical difficulties. So tell me if I'm treading old ground here. But I think, Mick, you mentioned that the consensus, there's a sort of bipartisan consensus on China now. Could you talk a little bit more about what you expect from the Biden administration, specifically with respect to the tariffs? I think you mentioned a bit more optimism, but what do you think is going to happen?
Well, sure. I think go back to pain, and one of the things that I think both candidates are trying to do is get to the right, for lack of a better word, of each other on China. It was who could be toughest on China. And while certainly I think you may see the language change and the temperature lower in our relationship with China, concern about our relationship with them at an economic standpoint is truly bipartisan in Congress. Remember, Trump came in as a protectionist Republican, which was a rare thing, but has sort of moved large components of the party into that camp. So the Democrats traditionally would be less free trade oriented than Republicans, at least in the last decade or so. And then you also wonder, and then I'll be quiet after I say this, we didn't get a chance to talk about whether or not the Build Back Better was a campaign theme, or was there actually a legislative initiative behind it? Because the Build Back Better was very similar in many ways to the president's Buy American, Hire American program. So query whether or not some of the same tools that the Trump administration brought to bear in order to be a little bit more protectionist don't also filter into a Biden administration. There's no strong free trade component in Washington, D.C. right now. Certainly there are members fiercely pro-trade. Paul Ryan would be amongst them. Some of the folks on the Ways and Means Committee, Kevin Brady from Texas. But that is hardly the center of gravity in Congress generally right now, and probably not even, certainly not an overwhelming majority in my party.
It's certainly true that if you read the Biden platform on Building Back Better, there's a lot in there about getting supply chains home. There's a lot about restoring manufacturing jobs. It does not seem like at all like there's a free trade sort of element to it. Jay, do you see this as something that's important to the economic outlook, and where do you see the US-China relationship going?
Yeah, I largely agree with Mick here. I mean, I don't think we're going back to the foreign policy, the trade policy of the United States vis-a-vis China like we had under Presidents Clinton, Bush, and Obama. There's just no stomach for that right now. I mean, I do think, and I think Catherine alluded to this a little bit earlier, I do think that in terms of trade policy, you'll see more multilateralism. The United States going to its European partners and saying, okay, we need to do something here about China. And back to Mick's point as well, I don't see the tariffs coming off on any great extent on China. I think a President Biden would use that as a negotiating leverage vis-a-vis China. So I think it's going to be a long slog. It's going to be a little bit more multilateral, but I don't think we're going back to where we were back in 2010 to 15.
And what are the implications of that for the economic outlook? Do you also view that multilateral approach as likely to be more effective?
Again, I used this word before, margins. If you look at exports of the United States, it's 10% of GDP. And so exports could explode in coming years, and that's certainly beneficial for the United States. But it's not like that's going to take U.S. GDP growth of, say, 2%, which is probably its potential, up to 4%. That's not going to do it by itself. So on the margin, that multilateralism is all very, very positive. But again, it's kind of at the margin.
Catherine, would you like to weigh in here?
Well, so I think multilateralism is not just about the United States. Multilateralism is something that happens not by the United States, but by all the other trading partners as well. So it's not just U.S. becoming multilateral and everybody else all of a sudden joining in. So what the current strategy of the last 3.5 years has been very much bilateral negotiations, bilateral trade balances, and as a result, a very closed strategy to trying to bolster the United States by keeping it out, by keeping everybody else out and away. And a different strategy that is beneficial for both home and abroad is to be open, to be more open, not free, not sort of, anything goes. But if the U.S. is more multilateral, then other countries are more likely to be multilateral. And that not only is beneficial to them, but we do get benefits to the United States. And it does matter whether the rest of the world grows. It does matter for the United States. I guess I would say it's a little bit bigger than the margin. I think I would say that it's more important that foreign growth that comes from the United States being multilateral opens the door for multilateralism to be the modus operandi abroad. rebounds back to the United States in a very positive way. And so, that to me is something that is important. I want to sort of make a point about supply chains coming back to the United States. Supply chains are moving around for a lot of different reasons. Companies were already evaluating their supply chain exposures and coming to the conclusion that looking at sort of the mean labor wage and economies of scale by like one big plant in China because it's cheap there, they started reevaluating that a long time ago. And the U.S.-China trade war of starting in 2018, that just sort of emphasized that supply chains needed to be more diversified. That was just extended and accentuated by COVID, but also by climate. So firms were already in the business of looking for different places to produce their stuff, more diversified places of production. So that ends up being more global, not less global. It's just more of a network as opposed to a chain. And so I think we need to reevaluate. It's not supply chains coming home. It's going to where they are closest to the market. And in some cases, that's not going to be the United States.
Henry, if I can jump in here, jump in real quick, because I think everybody's hit on something that is worth exploring just a little bit more, which is the right that multilateralism will sort of become more resurgent. We did not care for it. The president didn't like it. USTR was run with a bias against multilateral sort of trade agreements. But then you also take that, which I think is accurate, and you match it up with a continued concern about the role of China. And on my piece of paper, I've got multilateralism plus concerns about China equals TPP. There'll be something in that area, something like that. Don't know if we'll go back into those discussions, but that was a thing where trade and foreign policy might be able to come back together. I think it'd be very difficult to do a deal with the Europeans right now. They've got so much other things going on. And I do think that the bilateral discussions with the UK will continue. But when you look towards the Pacific, maybe something along the lines of resurgent TPP might be one of the immediate outcomes of the dynamic right now.
Yeah,
I'm interested there that you mentioned that bilateral discussions with the UK will continue. There's a lot of pessimism right now in Britain about the relationship between the UK and the US under a Biden administration. What's your general view, Mick, on the prospects of that trade deal? Can you expand a little?
Well, and let me put on my special envoy to Northern Ireland hat here for a second. Is the perception that Biden will be more pro-Irish and that necessarily means he's more anti-British? No, I think that's an outdated way to look at things. Certainly, Richie Neal's opinion here matters as the chairman of the Ways and Means Committee. The letter that he wrote regarding the Northern Ireland Protocol and the impact on the U.S.-UK trade agreements is honestly, I had no difficulty with it. I talked to Richie about it at length. He's a friend of mine. I don't see that big of a difference between a Biden approach to the UK-US deal and you had under Trump. Go back to Catherine's point. It's mutually beneficial. Why wouldn't you want to have a free trade agreement with the mother country? I think a lot of folks are surprised that we don't. Certainly, the Irish issues will continue to play a role as they have under the Trump administration. But I don't see a violent swing against Britain by any Biden administration.
We're coming up on the end of this panel now, but I just want to end this by casting this forward to ask how important are these January elections in Georgia for control of the Senate? Jay, how much are you watching that in terms of the prospects for policymaking in the US and the resulting effects on economic growth?
Well, we're certainly keeping an eye on it there. I mean, I would think that the likelihood that Democrats pick up 2 seats there, I think, is relatively small. But even if that were to happen, then you've got 50-50 with Vice President Harris breaking the tie. But what you would have to assume then is that all the Democrats move in lockstep together. And I don't know if that's necessarily true. I can think of some conservative Democrats like Joe Manchin, for example, may not necessarily want to go down that road towards a lot more fiscal stimulus. So it's certainly something we're keeping an eye on here, but I don't know if we would make any major changes to our forecast. Giving, if you can tell me right now what's going to happen in Georgia in January, I don't know if we'd make any major economic forecast changes based on that.
Mick, if you're a Republican senator right now sitting down thinking about how you're going to interact with the incoming administration on economic policy, whether you're going to obstruct, whether you're going to cooperate. Walk us through what the trade-offs are there and what you're thinking.
I think there'd be a lot more cooperation than there would be obstruction. Maybe I'm wrong about that, but I have a bias here in that I was in the House for six years, and we always looked at the Senate as being a lot more accommodating. Certainly, that hasn't been the case the last 4 years, but they want to get along. They are institutionalists in the large part. There's certainly exceptions to that in both parties. Bernie Sanders, Marco Rubio, those types of folks. But generally speaking, there is still a center in the United States Senate, generally. I am concerned about the Georgia races simply because, while, as I point out to people, Republicans can scratch their heads and go, maybe we got, something, maybe we got screwed a little bit in Pennsylvania and Michigan because they're Democrat-controlled states. But I don't think that Georgia really stands out as being a place where there would be a lot of shenanigans against a Republican candidate, which simply means the Democrats have done a really good job of organizing that state and getting out their vote. And that helps, the grassroots help in a special election especially. But I think Jay's point may be very, very well made, which is even a 50-50 split. He mentioned Joe Manchin. He also wrote about Kyrsten Sinema. A couple of the new senators, Hickenlooper, ran as centrists. So I think that's probably sage advice, is you don't automatically jump to the conclusion that just because the numbers favor the Democrats, you're going to get wild left-wing policies out of the Senate. Aspects there. So I didn't answer your question. I got off on a couple of things, but my apologies.
No, that's great. Catherine, I'm going to give you the closing word here. Any closing thoughts on that subject or the economic outlook in general?
So in terms of the elections in January, I agree with the comments that have already been made, is that it's at 50-50, you don't have a mandate, right? It's like you can't be sure that you're going to be able to get your policies through unless they make sense for the constituents that the various people represent. As a last word, though, what I am going to say is we've talked about how much the election might matter, and how much the vaccine might matter. The fact is that when we look at the global economy, we have written it down 60 basis points over the last 2 months, 30 basis points each month. And that's because of the extended period of time that it's taking the rest of the world to get back on track to growth. So when we focus on really short-term data, this sort of 30% growth in the third quarter in the United States, that is really the wrong perspective. The right perspective to be looking at is that we are still a very long way out of getting out of the COVID hole, much less returning to the kind of robust growth that is going to precipitate private sector investment that will generate the types of employment gains that we were enjoying in January of this year. So I think we've got an awful lot of an anchor that we still have to raise up before we're going to have the kind of robust economic activity that we, if you're a politician, you want to be able to have, and as a sort of a moral standpoint, that you really want to have for your kids and your parents and everything else.
Catherine Mann, Jay Bryson, Mick Mulvaney, that was a great discussion. Thank you very much for your time. And to everyone else, we're going to move to a networking break now, and I'll see you at the next panel. Thanks a lot.
Thanks.